The East African nation of Rwanda has gone through significant changes over the past 18 years. Under the leadership of President Paul Kagame, the country has transformed itself from a war-torn post-genocidal state to what is now regarded as one of the most stable and open democracies and economies on the African continent. With the Rwandan government's uncompromising stance on inclusive development, it was fitting for the country to play host to this year's conference themed Sustainable and Inclusive Growth in an Age of Economic Uncertainty. In his opening address, President Kagame urged all participants to think outside the box to find solutions that can work independently from international pressures.
It is also clear that in Rwanda and other developing countries, development is not driven by local politics alone. Although the agenda here is Rwanda-driven and led, the outcomes are often the result of partnership with development partners. And that's fine, fair enough. This means that development outcomes are partly dependent on external factors that are sometimes very unpredictable and, in fact, even not rational or logical.
Organizers say they chose Rwanda to host the conference because of its commendable progress in economic development that has trickled down to the rest of the population.
Rwanda has done very well on the issue of inclusive growth. Today I went to see a very interesting project where poor villagers have been given a cow each, and the first calf that's female is passed on to the next villager who is also poor. That really gets people out of poverty, and it gives the government an opportunity for real people to share in the sterling growth that we've seen in Rwanda. And I tell you, by 2017, the expectation is that 300,000 households will be impacted by this cow replacement program. Just as an example, you look at, for instance, the road from here, from Kigali to the border with Burundi and the Nemba border. First of all, that border is now a one-stop border post. The road between Kigali and the border has generated a lot of feeder roads. In fact, just the last 20 kilometers has generated, 20 kilometers to the border has generated almost 100 kilometers of feeder road connecting local communities to the main road so that they're part of the more formal economy, more formal activity. Just opened up and created incredible road economics around that corridor. So inclusive growth is alive in Rwanda, and it has really benefited people here.
A reflection of President Paul Kagame's reformative policies.
Rwanda has followed what has been prescribed as correct practices. And all indications are that we have done mostly the right thing.
Despite the notable economic growth of countries such as Rwanda, the International Monetary Fund cut its 2012 forecast for Africa, together with most other countries around the world, in the wake of the ongoing Eurozone crisis. The IMF projected 5% growth this year and 5.7% in 2013.
I think Africa has grown very rapidly over the last few years, and there is a great sense of optimism about the future prospects of the continent. But we are facing at the same time uncertainty in the global economic context, and so there is a little bit of a worry that this uncertainty may in some sense affect the economic performance of African countries. Not all of them. It will affect countries differently. Those that are more integrated in the global economy are more likely to be affected more than the others. But there is a sense that, as in the past, sometimes period of good economic performance was made less sustainable given the existence of external shocks. And so when we have this kind of global economic uncertainty, there's a little bit of an apprehension about, again, growth could be derailed.
On the back of this, AFDB President Donald Kaberuka said that Africa needed a more proactive strategy to avoid the ripple effects of future crises in Europe and the West, drawing lessons from the bank's response to the global financial crisis.
We ourselves at the bank doubled our lending and came up with innovative instruments to fill gaps in trade finance and liquidity support. Working together, we were able to adopt a policy stance that minimizes the impact of the financial crisis on African economies. But that was crisis response. Rich countries are very much concentrated on their own immediate problems to fix.
Despite the latest African Economic Outlook publication stating that 6 of the world's top 10 fastest growing economies were in sub-Saharan Africa, Kaberuka warned that economic growth would not translate to poverty reduction overnight.
Don't believe that simply because we are seeing rapid growth on the African continent, poverty will simply go away. It will take strong growth over several decades. I repeat, over several decades, for a dent in poverty of a lasting basis to be seen. I think it is important people don't confuse strong growth with immediate reduction in poverty, because these things take time. You go to China or India, you'll see that you've got millions of people seeing poverty and they're struggling with the same issues that we are doing.
In line with the focus on economic growth, issues around avoiding the so-called fragility trap were also discussed, including vigorous debate on what should be done with fragile states and whether or not an increase or decrease in external aid was part of the answer.
The way we currently deal with fragile states is we say that because they have such weak governance, such weak capacity and corruption and so on, that we should give them less money because the money won't be productive. Yes. But when you look at it, what that means is that these countries could be caught in a vicious cycle, where since they have less money, they have even less ability to address these problems of corruption and insecurity, which means that those problems get worse, so they get even less money and they fall into this, what we're calling a trap. So I was suggesting that maybe we should rethink our traditional way of allocating aid, which is based on performance, and rather think in terms of if we can use this money, and that's a big if, because it's not clear that just giving, it's certainly clear that just giving the money isn't the solution, but if we can manage a way of delivering money so that they can be used to address these problems, if that money actually helps these countries escape a 20 years of low growth, that is a huge return on investment.
Professor Sarah Anyanu, head of economics at the University of Abuja, agreed that aid was necessary to assist fragile states, but reiterated that countries also needed focused growth strategies.
Those countries too should be, they should put in place various strategies, not mainly external aids. They should be able to have capacity to mobilize domestic resources and also to develop people, to acquire skills, to be more productive, so that all the various sectors, agricultural sector, manufacturing, will be functional, But once they are in the trap, they will perpetually be there. 20 years for Burundi is too much for us. We should be our brothers' keepers. So they need not only external aid, but in terms of technology, they need technology, they need expertise, Human development is also important. They need to be developed. The social capital, the human capital should be developed. Education, health, and all these basic services should be made functional so that there will be development, and then they can now talk of sustainable development.
Participants agreed that a functional and well-developed financial system that can support high levels of investment is one of the best ways of reducing aid dependency. Rwanda, a former fragile state itself, could offer valuable lessons to those still caught in the fragility trap.
I think it's no secret that Rwanda is actually a very well-managed economy. When we look at it more closely, and it's well-managed from the top, so there's clear direction from the president, as we heard yesterday as well. I also find one thing that's very impressive about Rwanda is that everybody down the chain of command, from the ministers to the secretaries, have a performance-based contract. So they know exactly what they have to deliver, and they know the consequences if they don't deliver. This is a very different way of running a government, and that has tremendous potential. I don't know where this comes from, but somehow when President Kagame says something like this famous incident with the plastic bags, the people go out in the street the next day and clean up the plastic bags. So now I can't imagine that happening in Nigeria
Yes.
or South Africa for that matter. I don't know, there's maybe some unquantified. But let me add one other thing, which is one of the other reasons behind Rwanda's success was this results-based financing mechanism they introduced for health care, where doctors were paid a bonus based on the number of children they immunized and the number of pregnant women that they examined. And it worked very well, and we saw child mortality rates falling dramatically in Rwanda. We have now introduced the same thing in Burundi, and it's working just as well.
Right.
So I think this is something we should try to publicize around the world, that even in very low-income, fragile states like Burundi, this method of changing the incentives for service providers actually delivers results.
Purposeful leadership, such as that of President Kagame in Rwanda, was hailed as a critical ingredient in achieving sustainable and inclusive growth.